Tesla. It's got to be one of the most watched, most debated stocks on the entire planet. But if you cut through all the noise and the headlines, what is the data actually telling us right now? Well, that's what we're going to do. We're going to look at the raw technical signals to see where Tesla's stock might be headed next. Let's dive in. So, what is the story with Tesla? Is it this unstoppable rocket ship just blasting off to the moon? Or is it more of a wild roller coaster, with those thrilling highs and some pretty stomach-churning drops? As we're about to see, the data kind of suggests it's a little bit of both. And that's the fascinating tension we're going to unpack together. And just to get a sense of the sheer power we're talking about, just look at this number, $470.75. That's the impressive high this stock has hit in just the last 3 months. That peak alone tells a story of some incredible upward momentum. Okay, so to really understand what's happening with Tesla, we have to start with the big picture. Before we get into all the nitty-gritty details, we really need to establish the dominant trend that's been driving the stock's every move lately. This chart tells the story perfectly. Look at this. Just 3 months ago, you can see the stock was way down there, trading at a low around $273. Now look at the climb to where it is today, right up near its peak. That massive move from that first bar to the second one, it just screams a period of intense buying and really powerful bullish sentiment. And the foundation of that whole climb is this classic pattern. In technical analysis, seeing higher highs and higher lows is pretty much the textbook definition of a strong uptrend. It's the #1 clue for analysts that buyers are firmly in the driver's seat, just consistently pushing the price to new levels, even with some small dips along the way. Okay, so we've established the trend is strongly positive. We get it. But what's holding it all up? Let's pop the hood and take a look at the forces that are really supporting this powerful momentum. So before we look at the numbers, we gotta understand this key concept, moving averages. The easiest way to think about them is like a stock's center of gravity. They kind of smooth out all the day-to-day noise. You can see the real underlying trend. And the rule is simple. When the current price is trading way above these averages, that's a huge sign of strength. And here is the hard data for Tesla. That current price of $453 isn't just a little above its averages, it is soaring above them. It's way clear of the short-term 20-day, the medium-term 50-day, and even the long-term 200-day average. For an analyst, this is huge. It tells them the bullish trend is healthy and confirmed across pretty much all time frames. But, and there's always a but, right? This is where the story gets a lot more complex. A powerful trend is fantastic, but can it go too far, too fast? So now we have to act like mechanics and start checking the dashboard for any warning lights that might suggest this engine is starting to overheat. First up, let's look at the Arun indicator, which basically measures trend strength. An Arun up of 92 versus an Arun down of just 4, that's not even a fair fight. It's an overwhelming signal that says the upward trend is in complete control, and there's almost no downward pressure to be found right now. So far, so good. But this is the crucial question, isn't it? Just because a car is going super fast doesn't mean it can't redline. And this is where we pivot and start looking at indicators that measure not just the direction of the trend, but whether it can actually last. Are we getting into what they call overbought conditions? And here are those potential warning lights on the dashboard. The RSI, a key momentum gauge, is getting pretty close to that 70 level, which analysts consider overbought. Then you've got the MACD, another momentum tool, and it shows that while things are still positive, the upward force is actually weakening just a little bit. And finally, the price is pushing outside its Bollinger Band, which is kind of like the needle on a tachometer going into the red. It suggests the trend is overextended and could be due for a pause. This quote from the analysis just nails the conflict we're seeing. The trend has all this power, but it's stretched. The main point is this. The car is moving incredibly fast, and it's going in the right direction, but several gauges on the dashboard are flashing yellow, telling us to be a little bit cautious. So with a strong trend, but some clear signs of overheating, how do we even begin to map out what might happen next? Well, let's move on and see how analysts use this data to identify the key price levels and chart out some potential future paths. This slide basically lays out the battlefield. Up top, the immediate resistance is that recent high of 4070.75. That's the ceiling the bulls absolutely have to break. And down below, we've got layers of support, or floors, first around the 440 to 445 area, and then a stronger one down at that 20-day moving average around 419. These are the critical lines in the sand for traders. Okay, so based on those levels, the analysis really boils down to two main scenarios. The bullish case, That's a breakout above the 470.75 resistance, which could act like rocket fuel for another leg up. The alternative is a corrective pullback, where the price just can't break through and instead drifts back down to test that stronger support level around 419. All right, we've looked at the trend, we've checked the momentum, we've seen the warning signs, and we've mapped out the potential paths. Now, let's bring it all together for the final verdict from this technical analysis. And here it is, the bottom line, all in one sentence. The overall big picture trend is undeniably strong and bullish. But the short-term picture is flashing just enough warning signs that, well, anyone involved should probably be prepared for some turbulence and sharp price swings. So let's just quickly recap the key takeaways here. First, that long-term uptrend, it's real, it's confirmed. Second, the short-term picture definitely calls for some caution, since the stock is showing those signs of being overbought. And third, and this is so crucial when you're talking about Tesla, high volatility is just part of the package. So sharp moves in either direction are always on the table. And that brings us to our final thought. After seeing how the data reveals both this powerful, persistent trend and, at the same time, signs of extreme overextension, it leaves us with a really fascinating question. Is this signature volatility we always see in Tesla's stock, is it a flaw to be feared, or is it simply a feature of the very engine that drives its incredible growth?